This is episode 54 of the SteadyTrade Podcast with your hosts, Tim Bowen.
Just Google AWX Bloomberg and you'll see what a pumping up in 2018 looks like.
And Steven Johnson.
We're going to talk about this big time. Big time.
Today, Tim and Steven walk you through part 4 of Tim Sykes' 14-part free trader checklist video series. And we finally settle the age-old question, does Tim Bowen ever wear flip-flops? Let's just jump right in.
Welcome back to another episode of the SteadyTrade Podcast. Sometimes I can't believe I'm still here and I've got a job. It blows me mind. But I'm privileged to be with Tim Bowen and a secret man in the background who listens to everything we say. We're reviewing the SteadyTrade.
It's called Trader Checklist, and this is the 4th episode of this series, but you still don't remember what we're doing. So
I think we should just carry on. Is that okay?
Keep going. Yeah.
Okay.
Hey, it's raw at SteadyTrade, man.
This happens all the time. I make mistakes and Tim Bowen covers.
And to all the listeners, as much as you think it happens twice as much. So.
It happens even more. And when I'm normally drunk, I'm better because I'm like less focused with less thoughts in my head. And then you made us go sober and things are going wrong. This is a big mistake. It's your fault that I'm messing up. But it's SteadyTrade. It's part 4. It's reviewing trader checklist. Tim Sykes' free DVD to the public where he teaches you to look at a number of different variables. And based on these variables, add up a score to a numerical value that grades a stock. If you're listening to it on iTunes, thank you for being an iTunes subscriber. Check it out on YouTube as well because you'll actually see the accompanying charts and clips. And it's all for free.
Yeah, great point. Because we are bringing up a lot of slides and charts. So love the iTunes listeners, but yeah, check out SteadyTrade.com or go to YouTube, go to our SteadyTrade, and then you could see the the charts we are discussing. So let's get started. Producer, first clip.
Let's get started.
Frankly, I'm also a little bit favoring of short selling, just because I've had so much experience and I've seen so much crazy stuff over the years. Here's one of my favorite stories. Making $30,000 in one day from a rest stop in Molly Pitcher, New Jersey. This was before Profitly was built. I was actually driving down from New York down to Florida. So I had just gotten started with my road trip and I was short big this blatant pump WLOC. The stock was up over the course of November, December. This was 2011. And it was up nicely, or 2010 actually. It was up nicely from 25 to 70 cents, but then it kind of hit this wall, and it dropped from 70 and it had a little bounce, and the whole thing was, could it crack 60 cents? Remember in the last video, I was talking about how, sometimes you have these breakouts that break out all the way and then they come right back to the breakout level. And then it's a question, can it continue to break out? Can it be a confirmed breakout? And in the examples I showed, that's true. In this case, it broke down, bounced a little, and then the question is, can it break this key 60 cent a share level? You can't short right when this is dropping. You can't wait for this to crack. Sometimes with shorting, as you'll learn, you need to reserve the shares ahead of time, and when it starts cracking, it really cracks. Here's another intraday example of how it dropped from 60. I guess you could have gotten a little short off here at 50 cents, but this was intraday. There's morning spikes and there's morning panics, and there's no news on this stock when it drops 50% on the day, but it was awesome, and I absolutely banked on it.
Couple of good points there, but the first thing I just want to say is how effing amazing is it to make money in random places? Like I'll never forget, right? I was on a plane to Slovakia because I had an Eastern European girlfriend who I love dearly. We're not together anymore. It's very sad. But I'm over it. Don't worry, I'm over it. It's okay. I'm over it. But I flew to Slovakia just to check out a little known city called Bratislava, and I made $300 on the way there and $500 on the way back. It paid for me trip because it was a super cheap country. And I was like, I am living the dream. But so what for you? What was your number one spot?
Ooh,
What's
geez.
your number one spot for making money?
Like for like random versus home, most like hotels, I don't have like a rest stop story like Tim has. I've never traded on a plane because I'm always too scared that the freaking Wi-Fi will go out. So I've done well in a lot of hotels, but I don't have anything cooler than just a random hotel room.
I mean, I'll just stop you there and I'll say, if you're scared to wear flip-flops in the airport, you're definitely scared to trade on the plane.
to trust money on freaking terrible airport Wi-Fi. It's 2018.
I'm surprised you're even on a plane. How did they get you on a plane?
Well, so I fly.
This thing. Attack.
Great point. But again, when you think about the risk management, flying is very, very safe. It's probably safer than driving a car. And when you
go down.
And when you
some planes
they
go
do
down.
not.
Hang on a sec. So you've never been attacked ever, never. But you won't wear flip flops.
Correct.
But we've seen countless planes go down almost every month, and you just get straight on them. You just raid those.
Yeah, but that's I think is that a red herring or a straw man? Which what are the statistics of number of people that get beat up because they fall down running away in their flip flops? You don't have numbers on that, and it's not interesting
because it never happens.
Remember,
there's no numbers on that because it doesn't happen. But there's numbers on plane crashes because they happen every month.
Every month. Think about the couple of the two biggest killers are obesity and smoking. Who talks about obesity? Nobody talks about it, but it kills way more people than plane crashes. But plane crashes get on the news, so it sticks in your brain, which then forms a cognitive bias, which is something you should always avoid as a trader. Never get biased in any position. Always trade what you see. Don't let others, chat rooms, Twitter, whatever, taint your thinking like Steven is being tainted by the media that goes nuts over an occasional plane crash versus car accidents. Look at car accidents. What is there?
You shouldn't be driving a car.
In Michigan, there's 40,000 car deer accidents a year. People hit 40,000 deer a year. That's way more than plane crashes.
Do you know what you should do?
Well, I try and kill as many deer as I can. That's what I do.
Do you want a better idea of what you should do after StocksToTrade? If you ever stop, you probably won't. But you know what you should do?
Sure, lay it on me.
I'm giving this away to the internet. It's a free entrepreneur idea. Instead of flip flops that you can't run in, rip rops, running flip flops.
It's probably like Crocs. They're just as bad.
Solves the problem. Flip flops that you can run in. rip rops. Anyway,
yeah, it's called shoes.
No, you've got the air conditioning toes, but you can run in them. But the one thing I liked about that pump is
I'll let you finish. Which that was a real pump. Jump back to that chart, and you'll see what we talked about last episode. Notice it's green every day for like 60 days. That's a pump.
But the thing is, though, like Tim was saying, you can't get the shares when it's on its way down. So you've got to kind of buy strength. And as a general rule, you should short strength in covering the weakness. And when you going longs, often, well, longs a bit different. Long, you do buy strength sometimes. But when you short, I never really.
Well, depending on the market, yeah.
Not very often. But if you look at that chart, if we pull it back, basically you've got this big run up and then you've got the dip. And then when it bounces, you don't know if it's going to go higher or not. You don't know what the promoters are going to do. So it's a probability game where you've got to basically short that next green day after the bounce on the 24th of February. And you're thinking, well, I'll tell you what, I'm shorting at 68, 69 cents. If it breaks 71, 72, then I'm out. But it's got the potential to go down to 30. So the risk reward is like 30 to 1 or 40 to 1 or whatever it is. But I just want to make the point that often you don't know. Like, I mean, you can try and short the red day. You can try and short the first red day. I don't know if you're going to get shares though. Do you know what I mean?
That's one of the ultimate dilemmas with shorting low price stocks is when it's the obvious play, all the shares are gone. And we talk about shorting a lot, and we'll talk about it more in the future. But just remember, you can buy any stock. You can buy anything. It could be the sketchiest, shadiest thing, or it could be Apple, it could be Google, it could be General Electric. You can buy anything but you can't short everything. And it can be especially low priced and especially the most obvious short setups, all because all the shares are gone. And then what I don't like about it, and this is one of the things that makes me rage, along with flip flops, is you'll stalk these things for days or weeks, and then like you said, they break support, and all of a sudden, in like last week there might have been borrows, and then you go to short it this week and there's no borrows, and you're like, man, I just wasted a week watching this stock when I could have been trading other stuff.
Do you know what's worse? Do you know what's worse than wasting a week watching it? Shorting it all the way up. That's probably worse. Probably worse. I mean, I don't know anyone who does it. I mean, I don't know anyone who does it, but it's pretty bad being nearly on a short. Next clip.
I don't like trading tickers with a Q at the end. A Q means that the company is bankrupt, and with bankrupt companies, technically, fundamentally, they're worthless, but you sometimes get these hedge funds that pick up assets for cheap, and the stock can spike, and there's rumors that, there's going to be an acquisition in bankruptcy. I never really know how to trade it.
So basically, I agree with Tim. Now, what you will find with the Qs, they're called, and a good resource is Google 5-digit tickers. You'll get like an Investopedia article, Investopedia is a great free resource, and you'll see what all these 5-digit tickers mean. And the Qs are what we call them. They tend to run as a sector, even though these bankrupt stocks may be in completely different industries. You might have like an airline and a biotech and a technology company, but depending on now it doesn't happen every year, but depending on the time, these Qs will get active. Normally when it's during slow times, when there's like nothing interesting, like when there's no Bitcoin stocks, there's no marijuana stocks, there's no cloud companies, you'll see the Qs tend to light up. Now, I have traded them. I have not done particularly well on them. And why do I think I haven't? Because of exactly what I just said. It was a slow time, wasn't a particularly great time for volatility, and everybody gets bored of staring at their monitors, and they're like, hey, let's trade some bankrupt stocks. So if you're new, I would tend to just keep those off your list.
Yeah, and I mean, I don't really have anything to say because I don't know that much about the sector, but I mean, do you know what, Tim? That's okay. It's okay not to know about everything. I mean, I already messed up the ending anyway, so.
No, that's actually a very good point. Especially in day trading junk stocks, you don't need to be a rocket science man or rocket scientist. No, so
you just need to know one thing. More importantly, you need to stick to your effing plan.
Yep.
That's the most important thing. If you can stick to the plan, that's bloody great. Next clip.
And just to give you an idea of how bad I am as a trader sometimes, I believe I was short right here at $2.70. I think I shorted, I want to say 35,000 shares. So if I had just held the 35,000 shares, I mean, it drops $1.50 from my short, or $1.40. So theoretically, if I was a great trader, I could make 50 grand. As it turned out, I vaguely remember shorting 35,000 shares at 270 and getting all excited and covering them at like 250. Or maybe I was short at 250 and covering at 230. But I made 20 cents a share, if I remember correctly on this. So if you ever think, oh my God, Sykes is such a genius, he's such a good trader, I have so many trades to disprove that. It is scary. And my critics like to point that out, saying, oh, Sykes not a great trader. I admit it, okay? This is why I'm not running $1 billion hedge fund. I am not a great trader. That doesn't mean that the patterns don't work, that the lessons don't work, and that it's not going to help you. And guess what? What I found is that actually my being a not-so-great trader means that I am kind of like you. So the $4.4 million that I've made now over the years can be made by someone like you.
It's funny because I see HHWW and I literally, I was sad there. I mean, you guys hear me as the crusty old dinosaur talk about the good old days. I mean, HHWW dropping 70% intraday. I mean, you want to know why I'm a jaded short seller now? When was the last time you saw something drop 70% intraday? I mean, those were the good old days. I actually I got like melancholy, like actually sad there for a second because I'm like, I remember HHWW. I shorted that stock too. And man,
stop it, Tim! You're gonna end up swinging as long, and I just can't.
Well, it'll. Remember, the market's always circular. It'll come back. So.
And when it does, I'll be excited. But there's two things that stuck out for me on that trade, and I don't know if you want to scroll back. Maybe we can scroll back, but I mean, there's one thing. There's the famous saying, and it's that amateur traders always take profits too early. And Tim Sykes is an amateur trader. He's a very good trader. In my opinion, one of the best traders. He's been a little bit self-deprecating there. I think he's one of the best. But it's a common theme that average traders or beginner traders take the profits too early and they let the losses run too far. And John Wilson will be happy that I give him a shout out. I'm sure he was on Twitter saying, check out this profit and this profit. And I was like, dude, you're taking 2 and 3%. I'm like, really, really, really. I know it's difficult, and I know you're used to losing, but let your winners run as much.
And
as
that's
it's part of the game, though.
Yeah, totally agree with you. But where that comes from is, and it's part of the process. I guess I again, 100% agree with your point. But it's like I know a lot of guys. It's like you're in the beginning. You're losing. That's part of the game.
Yeah, confidence boost.
Yeah, and then you see a little bit of green. It could be $8. It could be $12. It could be $50, and you're like, "Get me out!" But that's when you don't want. That's the last time you get out because now you finally got one right.
It's confirmed. Yeah, and the other thing there is, even though this is a slightly different market, I mean, a lot of people are like, you should never show weakness. You should never show weakness. Why are you shorting support? Why are you shorting support? But like the one time that I think you can short support is if the volume is dead and it is ready to fall off a cliff, then take a short. Like, and obviously you've got to have a tight risk because if it picks up, everyone else is short and it's going to boom. But I think it's fine to take a short in that position. And it's the short that Tim took.
Now, the one point I will make, and that is all kind of against what we just talked about. The one thing, when you're trading the most volatile of volatile stocks, whether it be HHWW a couple of years ago, whether it be AWX, AWX, some of us were trading it in the 4s and it went to like 35 2 days later. I can tell you this, in the most volatile of volatile stocks, you can also never be out too early. These things, long and short. If you're going to trade something like AWX that went from $1 to 35 back to 3 in like 4 days, you can also never be out too early too. If you're up a couple $100 and you get out with a small account, that's not a bad thing either. So.
And this is what I like about this podcast. It's a conversation-based learning where you learn what not to do from my mistakes and I learn from what to do from your profits. Next clip.
Here's another example, CLRH. I bring this one up because this is a few years old now. But for 2 weeks, they sent out promotional mailers. And the stock went from $1 to $1.75. And then in just 4 days, it goes from $1.75 down to 25 cents. And if you do a blog search, a Google search for CLRH in my name, you will find blog posts of me warning that this was going to crash. They were based out of a honey baked ham store. The promotional mailer. Wait, you got to read this. These stories are ridiculous. CLRH, Timothy Sykes. You're going to laugh when you see this. Or maybe you will if you understand what this is. Here we go. The real reason this penny stock collapsed, 88% in 4 days. This is from 2010. Somebody posted on Yahoo message boards and they say that this is from investor relations. I have no idea if this is true or not, but it would make perfect sense. as a public company, our stock price is subjected to fluctuations. April 20th marked the year anniversary of the company going public via reverse merger, and this enabled original shareholders restricted stock to begin to diversify their portfolios by selling a portion of their shares. This is not selling a portion of their shares. This is a freaking fire sale. So Courtney Smith was hired by insiders to send out a promotional mailer saying how great this company is. And then when their restricted shares finally became unrestricted, and we'll go over that in a little bit, the insiders dumped as much as they could, and it happened all in 4 days. Welcome to Penny Stock Lands. Welcome to Pump and Dumps.
I think the producer intentionally picked these clips to just make me sad, man.
It's a sad
I remember
day.
CLRH, man. It's
a sad day. It's a sad day for you. It's like when that girl broke up with you. We're not going to go back there though.
But man, it's wild how we can. I remember we went over this at one of the previous penny stocking conferences, which is coming up in October of 2018. And actually, I remember when we went over CLRH was back in the day again when they were much smaller events, much like the Tim Sykes Inner Circle now. I remember that one. It was at the MGM Signature. We were in I don't know, there might have been 15 or 20 of us in there, and we broke down this stock, and it collapsed the next day or two later. But yeah, it makes me miss the days of the old, of the true pump and dumps. And again, Google Tim Sykes Inner Circle. It's pretty cool. It makes me think back to that when it was just, we do them now. I help out with a lot of them, and there's 10 or 12 people there. So.
I forgot 2 points. I think I forgot the second one. The first point is when we'll have these conversations and we'll have these blasts from the past, it makes us think that you know quite a lot of stuff from a long time, and I should probably listen to you more. I'm I probably should have took things more seriously when you've told us stuff because you've been around loads of years.
I may be old, slow, and dangerous behind the wheel, but I do have uses. Yes. So.
No, but the crazy thing is, I'm I probably know shorting this bit better than Tim. I don't think I know it better, but I'm this isn't Tim's style. I probably know it better. Do you know what I mean? I'm Tim doesn't short at the open. I probably know it better because he doesn't do it. So how would he know better if he doesn't do it? But the thing is,
I used to do it all the time.
He probably used to do it and got burnt as shit. And you're why are you showing out the open, Stephen? You're I've been through this phase. Why are you still doing it? And I'm Tim doesn't do it. You know what I mean, though? And I'm starting to think I've made a mistake. I'm starting to think I should have listened to you more.
Look at it this way. We're only just about to celebrate our 1 year anniversary, so it's only a year.
Yeah. Shame I'm only learning now that I should have listened to you. It's a bit of a bad thing. What was the second thing that I was thinking about? It escaped me mind. Yeah, the second thing was companies still do pump and dumps. Don't think that companies don't pump and dump stocks. It still happens.
Correct.
But it just happens in a different way. So stocks get really manipulated with a lot of inflated news, or they'll not inflate the news and they'll just trap people and trap the shorts and they'll put their own money behind it.
Great. We'll jump to the next clip, but again, as much as I get melancholy about CLRH, Google AWX Bloomberg. Okay. There's a great article. It's a free article on Bloomberg. Just Google AWX Bloomberg, and you'll see what a pump and dump in 2018 looks like.
Okay. Yeah, next article. We're going to talk about this big time. Big time.
I don't mind selling too soon. I lock in those profits. And then I held some, and I sold some even higher. But my own personal schedule, my own personal cowardice, whatever you want to call it, I want to pass it down to you. I want to teach a whole generation of coward traders. Seriously, that is my hope, because it's the coward traders and it's the cowardly reactions that will save you in this volatile industry. Remember, we are trading the single craziest stocks in the entire stock market. And I know it feels good to nail it and to, be gutsy. But guess what? I know too many traders who have lost big. They've lost everything. They have heart attacks. They have stress levels that you don't want to see. So I'm telling you to trade cowardly.
One of the, long running Tim Sykes quotes, metaphors, analogies, whatever you want to call it, is the classic trading like a castrated choir boy.
Yes.
And I mean, it is, I touched on it a few minutes ago when I talked about you can never be out too early. I mean, if you're going to trade Apple, okay, you can be patient. If you're going to trade Google, Facebook's down big the last week or so. You can get a little patient with that. I mean, come on, Facebook isn't going anywhere. But if you're trading the sketchy, volatile stocks that we love them. I mean, Facebook isn't going to go up 300% in a day. We can get a sketchy penny stock that goes up 300% in a day. But you cannot be bold. You cannot be like, I know this is going up. I know this is going down. You have to be scared. You have to be, fearful. Cowardly is the term Sykes uses. Because if you're not, if you think that, this stock has to come down because I'm short, good luck, buddy. Enjoy the poorhouse.
Tim, I'm going to say something here, and it's going to be a little bit poignant, and it's going to be very profound. Pretty poignant, and I'm going to say something pretty profound. Okay?
And by the way, Stephen, your voice sounds incredible.
Oh, baby. Does it really?
It sounds great.
Does it really?
I'm sure the listeners would like to know about the 45 minutes we've spent today dealing with your microphone. But as of right now, you sound amazing.
Really?
You sound amazing. Yes.
Oh, baby. Well, I thought if it might have been the 5 days without drinking that I've gone, which I'm incredibly desperate to have a beer. But the secret is it's just talking in the microphone the correct way. Oh, yeah, baby. Oh, yeah, baby. Groovy, baby.
So give me your poignancy and your pugnaciousness.
It's not pugnacious.
Along with the profoundness.
It's profound. It's poignant and it's profound. It's profound. But the profound thing is there's a lot of marketeers out there in the trading world. There's a lot of furus and gurus, and I'll never mention any names. But a lot of the furus and gurus make a lot of money and they trade different strategies and styles. And Tim Sykes used to always say, I used to try and teach people strategies and styles, but I realized that you need to go on your own path. And what I'll do is I'll give you all of the resources and I'll give you loads of different styles, but ultimately you need to go on your own path. And I came to this revelation and I emailed him about it the other day and I said, I realize now what you do is you teach the safest way to trade and you show all of the different market situations and circumstances based on the history. And then you let the person go on their own path based on the most safest principles and practices. And then people will learn more risky strategies to make money on their own, but they've gone through the process. So then it's comfortable for them and they'll not really make the mistakes. But if you dive into some competitor who's teaching you a risky strategy that they're making a lot of money on, you're not going to get it. You're just going to blow up accounts.
Yeah, I think that's one of the great advantages of Tim Sykes' challenge.
I just said something great, right?
Yes. And
you had that relief when you're like, oh, you get it. You're like, oh, you get it.
Yeah, part of the Sykes challenge is, you get to see it's not just, it's not a static, which again, Trader Checklist is awesome and it's free. It's a great resource, but it's static. I mean, it's the same as it was 2 years ago. The beauty of the Millionaire Challenge is every day you've got those live webinars. And like you said, he's teaching you good habits. I mean, again, we talk about my random personal Twitter feed, at T-Bowen, and it drives me nuts. These guys and maybe gals, I don't know, that are teaching people that have never traded before, or they've made one trade and they're like day one shorting something like AWX, a stock that's gone from, that's up 400% on the day. It's a low float stock. It's manipulated, all these things, and you're teaching somebody that's never traded before to short sell this thing with potentially unlimited losses. Oh, we talk about
a year or two. Doesn't matter.
I agree. Yeah,
but I don't think that process should be. I don't know if it can be taught. I think it's the market's so volatile. It's so manipulated. So risky. You need to learn that advanced stuff almost through your own process of self-discovery. Little.
But after you've been
here and there,
good habits. Yeah.
And after you've had good habits, but the one thing that I like, because that's where I kind of fell off track a lot. I was just like, yeah, I'm good now. I can short low floats, and I see Ducks or whoever else shorting these really low floats, so he's making the big money, so I can do it. But it's just not the case. Like you've got to find your own way and not be moved by other people, and start with the really good habits, make the money, and then think, I'll tell you what, I'll short in 9 million float, and I'll see how it moves. And then think I'll short an 8 million float. And then if you can get to the 3 or 4 million floats, then good for you. But you should never start there. You should never ever start there.
Totally agree. Your first 10 trades, your first 50 trades should not be shorting a 400% runner.
Nah, and if you're just starting out and something's trading 10 million, I just wouldn't even touch it. Just start slow and get used to the volatility. But okay, we've had a profound moment there, haven't we? I told you it was profound.
It was.
I told you it was profound. All right, next clip. Let's not save other moment, but it was a nice one.
Let me tell you about another perfect trade that worked out. This was on Below Deck, season 2. I brought 6 of my challenge students. It was a fantastic trip aboard this $12 million yacht. And it turned out to be free, not just for my students, because I was planning on paying for it, but also free for me, because I made a big trade that paid for everything, even though they didn't show the trade on TV. I highly encourage you to watch that episode of Below Deck. I come off like a douchebag. They edited it, and I am so happy in so many scenes, and you wonder why I'm so happy. You're like, what kind of guy walks around like this so happy? I was happy because I was in this trade that made me 70 grand. So it doesn't really make sense the way that they framed it, but I'm trading penny stocks. I made people wear shirts that say TimothySykes.com. I don't blame them for making me look like a douchebag.
Actually,
maybe I am a douchebag. But what you can learn from this douchebag, I think, matters.
Just real quick, notice it took a long time to get there, but notice we're wearing SteadyTrade shirts in that clip. Me and Ivan. Yeah. So anyway, go ahead and play.
But I just want to say, it's like they knew that I was going to be on the show before even I knew how to trade. I still don't know how to trade, but carry on.
Stock that really spiked it. 3D printed exoskeleton helps this paralyzed skier walk again. And they take a picture of this paralyzed skier. I think, this is at the Vatican. So it's like, the prayers have been answered. This new kind of like backpack looking thing can help make people walk again. I mean, this is news that has legs, no pun intended. And this is the stock spike that I was buying. I thought I was chasing it a little bit here in the 5s. Really the breakout was above the recent range in the mid 3s, but it was a bull market and the news was huge, and probably the best excuse for me to buy it and load up in the 5s was that this was for a TV show. That's why I bring up the fact that we're on Below Deck. Not to make you want to watch an episode where I look like a douchebag, but because I was on this TV show and I'm trading because I know I'm going to be on this TV show. I have cameras in my face as I'm doing this trade, and I wanted to bet big because I thought that whether I win big or lose big, it's going to make for great TV. It was 57,000 shares that I bought. And I was like, it's the 3rd day of the run-up, so not a great entry, but the story is explosive and should pick up momentum over the weekend. The CNET article, which I link, and they did do a financing at $1 a share just 2 weeks ago. But I said, I'll be aggressive here. My goal is to make $1 a share. And that's exactly what happened. The news did go viral over the weekend. And so we got a gap up. I'm buying it at roughly $5 a share and selling it at $6.22. Fantastic fantastic, trade. And, the $70,000 paid for the entire yacht trip for me and my students. So this, by the way, is the man who I must thank. This is Blake Alexander. He was a Trading Challenge student who was using an early version of StocksToTrade. And he was the one who spotted it. I did not spot the news. Blake spotted the news on the yacht. And he was like, hey, Tim, this news looks interesting. This chart looks interesting. And so I was in the 5s and I was out in the 6s. An hour later, it went to nearly 8. So I left another 150,000 roughly on the table. But that's okay. Or 100,000 on the table. I still made 70,000. I don't mind taking the meat of the move. So Blake, I owe you.
Yeah, so that was, that's a great, lot of things to talk about from this clip. Number one, that day on EKSO has turned into like the worst stock in the world. It's on my hated stock list. But back then, 5 years ago, 6 years ago, whenever it was, you had a great recipe there. I'm gonna do the hand thing where I take things off. You had a stock that had been uptrending. It was pushing the high of the day. They had a Friday afternoon press release. That's an old school technique because you love it because everybody reads the story. It was in CNN or some big web page, news web page. You love it because everybody reads about it all weekend. Everybody gets excited about it. So that's why Sykes went in even bigger going into Friday because he knew everybody would read this news. It was quote unquote sexy news. EKSO is a low float stock. You get a low float stock with news closing on the high of the day into a Friday. Man, they don't all work, but those are the kinds that gap up on Monday. And sure enough, it gapped up to $8.
Yeah, I mean, I kind of lost focus halfway through because I was thinking, 1, when will there be below deck 3? 2, will I be on it? And 3, who won beer pong? You must have played beer pong.
We did the second time actually. So I've been on below deck twice, and it was it was a neat experience. Obviously beautiful yachts. I mean, all expense paid trips. I can't complain. Incredible food, but very different experiences. The first one, if you watch the first episode, I believe it's called Premature Accorculation is the episode we're on. Yep. So from like 5 years ago, I mean, it is. I will go on the record saying Below Deck might be the worst television show ever made.
I watched it.
Millions of people watch it. Watch it. So, yes. But it was fun to kind of see how the sausage gets made. But the first episode, man, they just edited it to make Tim just like this evil monster. And then the second, and you could tell they were doing it. The first time around, it kind of like had this weird feeling to it. Where the second episode we just did a year ago, I think, was you could tell they kind of learned some lessons, and it was way more organic and fun. It was like you could tell they weren't trying to like gotcha, like a gotcha moment. That's what they were trying to do the first time around. So,
but I don't think I don't know if the world's got better or if television's got better, but like gotcha moments. They're not so big anymore. Okay,
maybe.
Why?
Okay.
No, I don't know. I'm just thinking, what value would you get by showing someone look like a jackass? I don't see the point in it.
And I'm thinking they kind of figured that out. Yeah.
But it's Bravo, right? I mean, Bravo. It was Bravo that it was on. Yeah, Bravo is only good for the 10 o'clock stuff.
Oh, okay.
You know the 10 o'clock stuff? You familiar with the 10 o'clock stuff?
I don't remember. I don't watch TV, Steven. So.
Okay, well, 10 and 11 o'clock, it gets pretty fucking interesting. It's pretty interesting. Some stuff goes on at 10 o'clock.
But they were both great experiences. We went to the Caribbean both times. I mean, I actually need to tell my Claxton story on the podcast sometime. It's about a 35-minute story on what it took to get me into the British Virgin Islands, but I'll save it for another time. But always want to thank Tim. I mean, again, Tim and I have been friends for years now. We're now business associates. I mean, you kind of get some of the marketing with Tim that can get a little over the top, but man, he's a genuine guy. I mean, he loves, taking care of his friends. I mean, you cannot pay for any food anywhere in the vicinity of Tim. I mean, he's a great guy, fun to hang out with, and it was a cool opportunity to go on both those trips and see him make that $70,000 trade, which he made with StocksToTrade, which was pretty cool too. So.
And just before I let you wrap it up and end it civilly, producer, can we just go back to the clip? Can we just go back to the photo, the original photo? I just want to check one thing before I let you go. I don't know if you know what I'm looking for. Yeah, I think you do. Let's just go back.
My hair was a lot longer.
Not bothered about your hair. I'm significantly bothered about one thing. I bet you're wearing flip-flops. I bet you, because on boats, on boats, you have to wear flip-flops.
Nope, I was barefoot.
You have to wear them. Nope. You have to wear them.
Hi, this is Aaron, aka Double A Ron from New York City, and I like to go outside and find a stray dog, preferably an aggressive breed like a pit bull or a Rottweiler. Then I get real close, stare it down eye to eye until it starts to chase me. Then I run. That's right, I run while listening to Steven and Tim on the SteadyTrade Podcast. You can register to win real actual prizes at their website, SteadyTrade.com. And if you really like what you hear, give the podcast a 5-star rating and write a glowing review on iTunes. I did, and this is how we say goodbye in New York City.